Hey everyone, welcome back to ForexCracked. If you're interested in Forex trading or just starting out, this is a must-watch. Today we're exposing the dirty tricks behind Forex trading scams, and more importantly, how you can protect your hard-earned money. Forex trading has become incredibly popular over the years. The potential for high returns attracts millions of people around the world. But guess what? Scammers are lurking everywhere, waiting to prey on unsuspecting traders. These fraudsters promise guaranteed returns, exclusive signals, and even VIP trading groups. Sounds great, right? Well, it's not as easy as they make it seem. These promises are bait to lure you into a trap. Let's break down how these Forex scams operate. First, they'll approach you with flashy social media ads or even direct messages. They'll claim to have insider knowledge or a foolproof trading system. Often, they'll post fake success stories showing their so-called clients making thousands. Once you're hooked, they'll ask you to invest your money in their platform or follow their paid signals. And after you make that payment, well, good luck getting your money back. Now let's look at some red flags you should be on the lookout for. Guaranteed returns. No legitimate trader can promise a guaranteed return. If it sounds too good to be true, it probably is. 2. Unregulated brokers. Always check if the broker is regulated by a recognized authority. Scammers often operate through unregulated platforms. 3. Pressure to act. Quickly, scammers will try to rush you into making decisions before you've had time to think things over. 4. Lack of transparency. If they're vague about their trading strategy or unwilling to share key information, it's a huge red flag. 5. Requests for payment in crypto. Be cautious of anyone asking for payments in untraceable forms like cryptocurrency. Alright, now that you know what to watch out for, here's how to protect yourself from falling into these traps. 1. Research your broker. Before investing, ensure your broker is licensed and regulated. Check reviews and forums to see if others have had bad experiences. 2. Start small. If you're new to Forex, start with a small investment. Don't jump in with large amounts of capital. 3. Use a demo account. Test your strategies using a demo account before trading real money. This way, you can learn the ropes without risking your savings. 4. Avoid social media gurus. Be wary of anyone offering paid signals or VIP memberships online. Real traders don't need to sell signals on Instagram. 5. Trust your instincts. If something feels off or too rushed, take a step back and reconsider. Better to miss an opportunity than lose everything. If you've already fallen victim to a Forex scam, don't panic. Here's what you can do. 1. Stop sending money. Immediately cease any further transactions with the scammer. 2. Contact your bank. Report the scam to your bank or payment provider. They may be able to reverse some transactions. 3. Report to authorities. File a report with regulatory bodies like the Financial Conduct Authority, FCA, or the Commodity Futures Trading Commission, CFTC, in the US. 4. Join online communities. There are online groups dedicated to exposing scams and helping victims. You may find others in similar situations who can offer support. Forex trading can be profitable, but only when done safely and with trusted platforms. Don't let scammers ruin your financial future. Stay informed, stay vigilant, and always do your research before making any investment. Thanks for watching. If you found this video helpful, be sure to give it a thumbs up, subscribe to ForexCracked, and drop a comment below with your thoughts or any experiences you've had with Forex trading. Until next time, trade smart and stay safe.